Well, good evening, everyone. Welcome back to the channel. So I waited about a week to cover this because I wanted to give a good solid several days of trading. But we officially have a brand new YieldMax fund. Well, not quite brand new. It's like a week old now. But it's called DIPS, which is the inverse Nvidia fund. So quite cleverly named. Uh, Kudos to Jay. Get it? Chips and dips. So Nvidia obviously is a chips company, AI slash chips company. That's what they're known for. Um, so chips and dip, haha. So he actually told us this when we were in New York. He told us some of these tickers and the cleverness behind the naming convention, so to speak. But anyway, that is not the important part. The important part is that they actually did a phenomenal job on their timing launching this because Nvidia has done nothing but this over the past week. Um, all the tech stocks, in fact. So Apple had their earnings today. It looked like a big fat dud for Apple. But Nvidia, since hitting like 135, has dropped. Like it dropped all the way down to like 104, and I don't know honestly what the hell happened in the market today. Welcome to Richard King. So let's go look at this because we were already up to 5% in this one. So I'm liking the inverse hedging strategy. If you all remember going back a year, this had been talked about for a while. Going all the way back, of course, to Tesla, our favorite. Of course, we have Crash, CRSH, inverse Tesla. So um, I'm really excited to see these inverse funds. These definitely could be a hedge for us, and we'll probably get great dividends when these stocks come down. Because as we know, what goes up must come down. And Nvidia obviously had a great run over the last year and a half or so. So we're starting to see that pullback. I'm happy I got in the split after, or actually slightly before the split, but we are starting to see that pullback. But anyway, let's go look at what we've got so far. So I like to not cover these immediately because I like to give a couple days time. At least I'd like to have now maybe a week's worth of trading. So let's go look at this. So the DIPS overview. DIPS is an actively managed ETF that seeks to generate current income from a synthetic covered put strategy. Now this is interesting, okay, because the others are synthetic covered calls, right? So this is actually a covered put strategy on Nvidia, while providing indirect short exposure to the share price of Nvidia. DIP's potential for gains from decreases in the share price of Nvidia is limited, while its potential for losses resulting from increases in the share price of Nvidia is up to 100%. Like that disclaimer, DIPS does not invest directly in Nvidia and does not directly short Nvidia. So their disclaimers are pretty good. All the CYA stuff is pretty good. I do have to say, because I'm pretty blunt, I do feel like a lot of people that get into these funds don't exactly know what they're getting into. So you need to definitely read the disclaimers, read as much as you can. Reading is always a good thing. Um, and the little pumpkin agrees with me, by the way, right? Reading is good, right? Yes. See, he agrees. Anyway, so yeah, let's read this again because I want this to really sink in. DIP's potential for gains from decreases in the share price of Nvidia is limited. So that's kind of a mouthful, or that might be a lot for a retail, new investor to handle. Um, Gains from decreases. That sounds like kind of a contradictory statement. Well, it's a short fund, so it's actually investing in puts. So it's going to gain when Nvidia decreases. And the potential for losses resulting from increases in the share price of Nvidia is up to 100%. So it's important to understand all of this. Okay, with that, let's go look at the chart of it because actually it looks pretty good overall for all four of you attending class tonight, or five now. Okay, let's go over here. I have it pulled up. So I got to give them credit. The launch date was really good. Well done. And by the way, I'm going to go ahead and announce this since we are into August now. Hard to believe we're into the eighth month of the year. Um, and as a reminder, compound interest is the eighth wonder of the world. So Jay is coming back on August 27th. So mark your calendars, get your questions ready. Um, it's always a fun time when he's on. Okay, so dips, since it went public on July 23rd, we have July 24th, trading days here. It's up 4.84% in the price return. So if I adjust over here and actually type in June 23rd, or excuse me, July 23rd, it's hard to believe we're already moving right along this year. I will say, I do hope that August doesn't top July in terms of craziness, because politically, that was our craziest month, like probably in American history. Okay, American political history, that is. Little caveat there. Okay, let's see. So let's do this. Actually, well, today's in the books. So, okay. So this is telling me this was the 24th. Huh. Look at this. Okay, so 5 days. Hold on. That's weird. I just adjusted, but it's showing something different now. So, of this fund group, the winner is Dips 4.84%, outpacing the S&P 500 over the last few days here. Well, this is a month, so hold on a second. I screwed something up here. Okay, July 23rd here. It didn't actually start till the 24th. That is weird. Okay, 0.56. Oh, because Nvidia actually went up today. Ooh, that's a big jump actually in 2 days. I didn't follow the market too closely, but I know we got killed today. Um, look at this. Seeking Alpha's already got top 5 stocks for a potential Harris administration. Oh, great. Are we getting ahead of ourselves there? It's funny. I don't want to get too political, but I will just say, like, she really did nothing as VP. Now all of a sudden she's the grand savior. So go figure. I think our choices suck, honestly. Um, it is what it is. All right, let's see where are we? Oh, and I lost one of you. A Harris fan, perhaps. I'm indifferent. I just it's all crazy. Last month was crazy. All right, let's see what we got. Okay, so let's look at total return. We're not going to have a dividend yet because it just went public. We'll probably get a dividend in maybe September, maybe announced in September. Okay, so Nvidia is down 4.54%. Let's look at, well, year to date, it's going to still be up. The S&P is only up 14% now. Nvidia is still up 120%. But as of here, June 18th, Nvidia was up 174%. So it's actually dropped 50% since then. And that was like right after the split. NVDY is still up. And here's the whole argument, underlying versus YieldMax fund. Underlying is outpacing by 40%. There's the YieldMax fund. So we can do total return, of course. Oh, and we are looking at total return. So yeah, there you go. There's no more meat to add to the bone here. So S&P, so yeah, Dips is brand new, but I have to say, impressive so far. Let me do this. I'm gonna actually look at Nvidia since we're at it. Nvidia's got 109. It's been a wild last couple of weeks. So look at this. Nvidia, where's the price here? Oh, here we are. So Nvidia peaked June 18th. Maybe I should have just sold there. Who would have thought? Um, so 135. Let's see, 1929. So we've dropped $36. Apologies for the headphones. I'll look into something else. Anybody have a headphone recommendation for me, by the way? I'm starting to get more comments. Okay, so yeah, we've dropped like $26 a share since here. So over a month, we're down 10% in Nvidia. NVDY, I'm going to look them up individually because I can see the price action here. NVDY was up to 31.02 in March, came back to 31. So it's exceeded $31 3 times this year. In the past month, it's down. See, it's down more than Nvidia stock. So let's go back to the charting over here. So here's NVDY, Nvidia stock. Nvidia stock. Hold on a second. Oh, that's just price return. Let's do this. Over the past month, NVDY is down more than Nvidia. So that's what happens. It gets it's getting actually more of the downside, but limited upside because it's the covered call fund. All right, so total return. Oh, look what it did. Wait a second. Wait a second. What the hell? Am I like tripping out or what? It's got NVDY twice. Nvidia. Okay, let's try this again. I've never seen it do that before. Okay. Huh. Oh, because there's no dividend. So with the dividend not even paid out, this is going to get worse actually. On ex-dividend day, this is going to drop by more because they're probably going to declare some sort of a big dividend because we know this has been one of our biggest dividend payers. So we're down like almost 4% over Nvidia stock over this time. So that is definitely not encouraging here. Should you take a loan against your house to buy YieldMax funds? Absolutely, you should take 2 loans. You should actually, uh, max out your debt, max out, like, all you should, like, max out your credit cards, and, like, you should, like, get as much money as you can through debt and dump it all into YieldMax, and Defiance too, right? See, I said that with a straight face. Um, yeah, that's funny. Maybe you can ask Jay that too. He would probably advise against it. But anyway, so that is the inverse NVIDIA fund. The market has really been discouraging this week. Um, I just, the past month is just crazy. Like, who knows? Who knows where we're going to end up? So the futures, look at this now. The futures for the market, the Nasdaq's down another 265, the S&P's down 43. What is going on? So Apple beat earnings, but they still frickin' dropped. I should have sold my call options. I was up 8 grand and it's pretty much half of that's been eroded. Uh, I don't know. I'm not making any sense of this market. So Apple beat earnings, but the stock is not having any upward momentum. Should we look at top 5 stocks for a Harris administration? Because it's pretty much a done deal, right? She's the next savior of the world, right? Uh, let's see here. Will I get 10K in dividends for the rest of my life? 10K? No, you want to aim for more than that. You want to have enough to buy Lambos and Cybertrucks. You want to have enough in Tesla to buy like a Cybertruck per year, right? And so a Cybertruck's like 100,000. So you need dividends enough from just Tesla in order to buy a Cybertruck, right? So, because I'm sure when Kamala's president, she'll give us more tax credits for electric cars, right? Because it's the future. Anyway, I don't know. I'm trying to calibrate to the current state of affairs. All right, so Apple ticks up as Q3 results top our expectations, but we don't have a balance in the stock. Let me go to Yahoo. Um, it's not. Sometimes Seeking Alpha doesn't display how I want it to. Let's see. Apple. We got a $1.29 bounce. Big deal. Where is? Let's see. It's showing the futures. Where do I just see like what the market actually did today? CNBC market. Let's do this. Um, stock futures slip after Amazon posts results. Traders brace for July payrolls report. Uh, so the Fed didn't cut rates. Is that one of the reasons? I can't quite put my finger on like why the market's dropping, other than our wild month of current events this past month that I'm not making too much sense of myself. Um, I don't know. Like, why is the market dropping? I honestly don't know. The Fed's not cutting interest rates. Um, Tech stocks seem to be getting hammered. For some reason, the talking heads in the media are talking about this like sector rotation to small caps, which coincidentally was like the day after I balanced out of them in my 401k, which was a a goof up on my part. Um, I am in TNA and one of my accounts, so TNA was doing good, but I remember at some point we were down like 700 points today. Where do I see the frickin' like how much the frickin' market was down today? This is crazy. Market today, which is still August 1st. On Thursday, the S&P 500 fell 75.62 points to 5,446.68. The Dow fell oh, it recovered. See, this is stupid because it doesn't say the Nasdaq. This is AP News. Everything else is just showing the futures. The Nasdaq fell 405. Hey, so how about some what does everybody think about TQQQ? Is it a good buy time for TQQQ? Let's go look at that. Let's try to cherry pick something that'll make us some money here. TQQQ. Let's go back to seeking alpha here. Hopefully seek some actual alpha. This could be the winning idea of the video here. Let's see. How about some call options on TQQQ? Um, let's see. Something else I find, this is going to be kind of my random thoughts. I'm not trying to be too political here or anything, but while Trump was in office, right, most of the tech companies like hated Trump and pretty much did everything they could to like undermine him while he was in office, including like censoring stuff. Literally, I mean, Facebook, Twitter, like they censored so much stuff like from the right, but tech stocks thrived when he was in office. So explain that to me. Anybody? Any takers? It never quite made sense. And I see I'm losing a lot of you as I wade into opinion stuff here, but I'm just trying to make sense of the world around me. Truly. Um, oh, here we go. Yeah, I agree with you. Like I have a feeling we're like on the same page. Um, yeah, he was very popular. He had The Apprentice, like it was like the number one show on TV. Now, like, of course, half the country or more hates him. But there's just things I don't understand. So tech stocks thrived when he was president, but they did everything they could to undermine him while he was in office, and it's provable. Like, what was it? Facebook? Well, like Meta, whatever they're called now, they like literally worked with the FBI to like censor certain posts. Like they even sat on a huge story right before 2020. But tech stocks thrived. So it doesn't make sense to me because, and I'm not trying to be political here, folks, but if you're thriving financially, but you're upset about, I don't know, he's all right, he's an asshole. I get that. But I don't know. Things just don't make sense to me. Kumla. That's funny. Um, Coffeeholic is in the house. All right. I'm just, I think our choices suck. It just, I don't know, wake me up in 4 years. Hopefully we'll have some better choices. Anyway, all right. So how about this TQQQ calls? Let's see. Here's what I would do if I'm gonna play this because I'm thinking the Nasdaq's dropping. I'm trying to like find a positive here, something that I can actually do something with. So TQQQ is up 24% for the year. We've dropped because it's, remember, the T triple Qs, so it's 3x Nasdaq, right? So we've dropped $20 since July 10th. So I am thinking about, because look, watch this, $63. We haven't been at $63 since May 31st, so that's like 3 months ago, or well, May was 3 months ago, but it's more like 2 months. But I'm thinking about, well, May 15th it stayed flat. I'm actually thinking about, because see, if look here, from May 31st to July 10th, we ran up $20. So that was on 63. Where is I should be able to do this math in my head. So it's 20 off of 63. That's a 30. Hold on a second. Am I right? 20 divided by 63. Yeah, it's a 31% gain, 32%. So in TQQQ, that would have been a massive win. That would be a gamble, but that would be a massive win. So I'm thinking, does anybody think tech is going to recover soon, or are we in this sector rotation that all the talking heads have declared? Any info on RDTE? Yeah, sure. RDTE is a publicly traded ETF that pays dividends. How's that for info? Is that what you were looking for? I'm hoping it will have a higher dividend yield than QDTE. I just covered that yesterday, so you might want to check that out. I do need to actually do a little bit of a refresher on how I do those videos because I had a really good comment today. So just so you all know, like I'm kind of like a mad scientist when I do my numbers and stuff. So when I show a month, it's 4.3333. It's like a repeating decimal because that is how many basically weeks are in a month on average. Trust me on that. I said that when I did the first video. So when I've always done my budgets and stuff like that, if you do the math, it literally is 4.3333. So that's why I do that. So a commenter actually observed my math and questioned it. I'm impressed with the level of detail that you all follow me. Um, but yeah, I'm going to do another video, or at least in my next roundhill video, I'll explain that further and maybe go into a little more detail. So let's see, we have some Kamala fans here. Richard King, Kamala sucks. Um, like I almost want to do a political channel so bad, but oh, good evening from Chicago, Mike Kojak. Um, how will this impact LeBron's legacy? Oh, LeBron, he isn't he like the new what are the King James? I don't know. I still think Michael Jordan is the GOAT. Um, but yeah, maybe Kamala should pick him to be her running mate. Oh, that's Kamala is the original Haktua girl. Hey, that is true. So she dated Montel Williams. I mean, she's she's a hoe, to be candid. Um, anyway, but somehow she went from like a do nothing VP to the Democrats' savior. So go figure. Anyway, I've probably said enough, so I will sign off now. Thank you all for tuning in. Like, comment, and subscribe, and join Discord. And if no other takeaways, TQQQ. Calls on TQQQ. Um, let me. This guy is trying to bait me here. Doesn't know how to read. And nothing would surprise me anymore. Okay, one more thing. Let me give you all a actual strike price that I would go for on this one. Let me look at the options chain here. Give you all some value here. So let me look at the options chain. I'd probably go out, assuming January 17th when Kamala gets sworn in. Um, Here's the thing: if I just accept it as fact, I can't be disappointed. So let's see, what would I pick? I would go out because I'm a cheap SOB. I would go out, and this bites me sometimes in the ass. Um, ooh, these are cheap now. Look at this, $65. No, I'd probably go. These are dirt cheap at like 85. I'd probably go like 85, but what works for me doesn't work for all of you all. So if you all were going to pick these, I'd pick a strike somewhere in here with an expiration of January 17th, just in time for our savior to take office. Um, Anyone believe? Oh, yeah. If you're trying to bait me. So in American history, just so you all know, the worst attacks in American history. So we've had Pearl Harbor. You all are like baiting me, but I'm going to go ahead and say this. I can't resist. You all have got me now. We had Pearl Harbor. We had 9/11. We've had two world wars, and those were all severe. But compared to January 6th, there's no comparison. Like that's like the worst like in American history. That's like the worst because it was storming the Capitol and frightening a bunch of overpaid politicians that don't really do much. But yeah, 9/11, forget it. Pearl Harbor, January 6th, though. At least that's what the media wants you to believe. Anyway, all right, you all got me for a few more minutes. I've probably really put my foot in my mouth now. All right, so I am going to go now. So thank you all for tuning in. Like, comment, and subscribe. If I said anything stupid, blame this guy. All right, see you all. Bye.